Money.
You might think that getting into the IT field is impossible without a computer science degree, but Tech Coach Ralph is here to prove you wrong. Get ready for some jaw-dropping revelations on how to break into this lucrative industry. Listen up, tech enthusiasts! Are you ready to break through into the IT field, but feel like you need a computer science degree to make it happen? Think again! Tech Coach Ralph has some exclusive, mind-blowing secrets to share with you. Get ready to be blown away by his jaw-dropping revelations on how to break into the tech industry without a computer science degree. So get your notepad ready, because Tech Coach Ralph is going to change your life forever. Buckle up, because you're about to embark on a journey to success in the IT field.
Let's get it. Good morning. Good morning. Good morning. How is everyone doing today? Today is Saturday, August 31st, the last day of August 2024. Tomorrow is September. Yes, call me Captain Obvious. Tomorrow, what comes after August? September, of course. So, the last day of August, we are in the building for this is the Men Lie, Numbers Lie. Let's we are messing up already. It is the Men Lie, Women Lie, Numbers Manipulate show. We are going to be reviewing some economic numbers today on what's been going on in the past week, the numbers to look out for, and I had a question, right? Because we've been hearing about fracking for every election cycle, fracking. And I was like, you know what? What the frack? What exactly is fracking? So, because look, I am from South Florida. I don't know anything about fracking. I'm like, you know what? They keep on talking about it's like the biggest thing ever. So we're gonna look into it for all those people who do not know what fracking is, right? It's a huge issue in Pennsylvania, apparently, and probably other parts of the country. I don't know what it is. So I'm like, right, let's find out what it is together. So I already did some preliminary research. We're gonna watch a video towards the end of the show, but I wanted to know what exactly is fracking, and I'll go from there, right? So we got my guy in the building already, Yakar. Welcome to the show, Yakar. How are you doing today? The tech pookies are in the building. The tech pookies roll deep. So, and guess what? It is Labor Day weekend as well. So happy Labor Day to everyone. But let's get to it. Let's not waste any time. And stop the show. All right. The show's over. I mean, we got my friend in the building, Alexis in the building, says good morning. Good morning to you as well, Alexis. How are you doing this amazing Saturday morning? How was the first week of school? Did you go crazy or did you survive? For all those who started school already, how was it? For your kids starting school, maybe you started school too. Maybe you're in college. Maybe you started school, your first week of school. How was it? Did you make it through? It's rough out here. It is rough, you know, but we shall survive. All right. So we're going to get into our economic numbers show today, and we're going to have some fun. We're going to learn about fracking. We're going to learn about all the different numbers and stuff like that. And we'll make do with what we got. All right. So let's get into it. So let me make an announcement first, right? This is what we're going to be doing because you know what? Hopefully your car is here to hear this. Your car, our Urban Dictionary of Economic Data is ghetto AF. Yes. This little Google Doc sheet that I have that I'm looking through to try to see what words are what, it is ghetto. It is not going to work. So we're gonna have a crossover show. This coming Thursday. We're going to put a break on the Jenkins and Playwright stuff that we've been doing, and we are going to start actually building out our dictionary in a more sophisticated way, in a more tech pooky way. Tech pooky stand up. So we're going to be I found this React template type thing where we can build out this dictionary. So we're going to take our urban dictionary on the road. We're going to build it out so that once we have our Saturday morning shows, we can just start up the app, and all of our data should be in there. And then maybe we can even deploy it to maybe Google Cloud on Firebase or something. We'll deploy it somewhere at some point. But I'm tired of having this Word doc that I'm like looking here and there for. I want to be modern. I was about to say I wanted to be a tech pookie, but I don't. I want to be. Okay, fine. I want to be a tech pookie. You got me on board, Dakar. You got me on board. We are going to be building out our dictionary starting this coming Thursday so that we can have the economic data terms, and then we're going to attach it with the definition and stuff like that. All right. So that is what we're going to be doing on Thursday. You definitely want to tune into that as we get that going. All right. So, oh my goodness. Stop the show again. We got my guy in the building. Mitch says, what the frack is going on? That is a great question. We're going to find out. All right. So let's jump into it. Let me go to, oh, wow. Mitch comes with the fire. Mitch, it's only 9:35 in the morning. You're coming with the fire already. He says, a Pookie trash. So you know what? Before we even get into the show, right? Before I came on, right? I don't know if Alexis knows this track by Trick Daddy Dollars. It might be before your time, Alexis. But me being from South Florida, been down here since 3 years old. Grew up on Trick Daddy, right? And one of the songs that came to mind after some conversations was the song Where You're From. And it just reminded me how social media and YouTube and everything like that brings people from all over the world. Like I mentioned, I have had conversations with people in the Netherlands. I coaching people in the UK, coaching people in Paris or in France. Got an email from the Netherlands, Tokyo. And then we have Mitch in New Jersey. We have your car in Dallas and or California, depending on the day or hour of the week. And it just reminded me that, where are you from is much more indicative of your experiences and thoughts and culture than anything else, So I'm like, the things that I believe that I see are based in mainly a South Florida vision. In addition to like different facts and stuff like that and research and stuff like that. But a lot of the things that you see and you believe is shaped based on where you're from, and not necessarily a lot of other things it's also like based on like family values and stuff like that. But what I'm saying is that like, the way that Mitch might see something is going to be versus the way that I might see it might be based on like my environment versus Mitch's environment, Alexa's environment, your car's environment, like your cultural upbringing and stuff like that, So that was something that I was thinking about based on some other conversations, that it's like you can't expect someone to just see it your way, because your way might be based on whatever information was given to you in your whatever circumstances that was given to you in, So that was just a thought that I had. I was just listening to the song Where You're From before we came on the show. I'm like, yeah, that's like because it says in the song, right? I'm from the city of caprices and impalas. I'll holla dog, right? One of my favorite songs, And I'll tell you this. My sister, college professor, but every now and then she has to throw on her Trick Daddy as she's driving through the streets, going to work and stuff like that. I'm like, because that's where we're from. That is where we are from, and that's how we do. That is how we do. I'm just saying. All right, let's get to it. And Mitch says, that's what I try to get you to understand. Guy hates to give me credit. Ding, ding, ding. Listen to Jay-Z, where I'm from. But that's the difference. All right. I know I'm going to get hate. I don't like Jay-Z. There's certain songs of Jay-Z that I like, but I don't like Jay-Z overall. I like Big Pimpin'. Only because UGK was on the song. I'm just saying. Don't hate me. Don't hate me. I'm just saying. Don't hate me. All right. But that's what I try to get you to understand too, Mitch. You say that's what you try to get me to understand. That's what I try to get you to understand as well. So when I'm like, I don't see what you're saying, it's like, it's because I see things differently. I've had different experiences. And of course the facts are always on my side. Because I remove myself from I'm like, all right, what are the facts? And then I see, all right, do my experiences go with those facts or not? And then I try to analyze from there. But Mitch says, unsubscribed I'm out. Oh, crap. Last one. I told you it wasn't gonna go well. It was not gonna go. You know what? Let's get it. It says, weirdo, I say I see your side, but you only see one side. No, I see your side. See, but Mitch, here's the thing. We are on the same side. That's why I can only see one side, because we're on the same side. I agree with you 100%. Although I agree with you 100%, what we see though, we just see through different lenses, right? Like it's like this. If you're on a plane, right, and you're sitting on the left side of the plane looking out the window, and I'm sitting on the right side of the plane looking out the window, we might see the same mountains and stuff like that, but we're seeing different things. That's all I'm saying. That is all I'm saying, right? All right, that's enough. That's enough of that. Let's get to work. Let's get to work, okay? So let's go over to. I'm gonna do this. Not sure I'm gonna do this. All right, let's take a look at the numbers that we're going to review for this week. And then we'll pull up Bloomberg after that. All right. Let's go to the other one. Where is... Oh, okay, I know why. All right, let's go to here. And let's go to that one. All right, let me hide that in the background. Okay, so the numbers that we are looking over this week are... We have, all right, so numbers to watch for the week, right? Came out a little late this week, but inflation is back in focus this week after the Fed Reserve Chair Jerome Powell indicated in a major policy statement that the fight to rein in fast rising prices had largely been won. A report Friday is likely to show the U.S. Personal Consumption Expenditure Index rose 2.56%, so that's something to look at as we go through this, in July from a year earlier. The same as in June, according to the nowcast by the Federal Reserve Bank in Cleveland, excluding volatile food and fuel prices, the Fed's preferred price gauge, the index probably also showed steady annual growth of 2.6%. All right, so it looks like they're going to be using this to justify lowering interest rates. Let me see. All right, so we're going to be looking at your car. Did you hear what we're going to be doing on Thursday night for our Urban Dictionary? Your car. All right. So Monday, August 26th, the U.S. Census Bureau will release its monthly report on durable goods, which measures manufacturing activity. And Tuesday, August 27th, the Conference Board will release its monthly consumer confidence survey, which measures how optimistic Americans are about the economy. So more about some feelings. And then Thursday, August 29th, so we have about like 6 points of data to review today, all right? So Thursday, August 29th, the U.S. Department of Labor will release initial jobless claims for the previous week. The report, a proxy for layoffs, tracks the number of people filing for unemployment benefits. So people who just got laid off or who are filing for the first time. And then we have the Bureau of Economic Analysis will release a preliminary gross domestic product reading for the second quarter. So we're going to get our preliminary GDP information. And then yesterday, August 30th, the U.S. Department of Commerce will release July's Personal Consumption Expenditure Price Index, the Fed's preferred inflation measure. The report measures the change in price of goods and services, excluding food and energy. And then lastly, the University of Michigan will release its reading on August Consumer Sentiment Index, which measures how Americans feel about current and future economic conditions. All right, so that is our plan for today. Let's go over to the other document. All right, so the announcement that I made is that we're going to be building. So your car, we are not going to be doing this. Your car, no. That is that we're not doing that. Nope, that's not what we do here. That's just a regular Pookie, all right? That is just a regular Pookie. That is not a tech Pookie, all right? Let's go to. but we're going to be building out the Urban Dictionary of Economic Data because, like I was saying, it was too ghetto, right? Just having where's my Urban Dictionary of Economic Data? Let me show you. Let me show you. Where is it here? So this is just too ghetto, your card. This is just too ghetto. We can't use this, right? We need something way better. So we are going to be building. We're going to. I found a React template or something like that to build a dictionary. So we're going to use that to build a dictionary, and then eventually we might deploy it to like Firebase or something like that. We'll see. But say something to get us started so that we don't have like we can actually use a real way to search them and not have this long list of stuff, you know. So we're modernizing, right? We're turning it into a tech pookie development. All right, so let's start looking. All right, so let's take a look at the calendar, and then we're gonna go through one by one. Mm, okay. All right, here we go again. Let me see. Now I have to be all Devi and stuff like that to make it look the way that I want it to look. I should just create my own API to pull the stuff in. Let me see. Let's go to and let me say with when they don't develop it the way that you want it to be developed, then you got to go and do it yourself. And then margin 0 auto. How does that look? And still doesn't look as I want it to look. See if I zoom out a little bit. Still doesn't look right. After all that hacking I did, it still doesn't look right. All right, let me see again. Come on. Let's see. What else can I do to it? That's so weird. That should make it fit. Let me see. All right. Well, let's see. Margin right or margin left. And let me do, there we go. So let me put that to 500 px. Let's go with a 300 px. 300 is too low. All right, pardon my my OCD, but I'd rather just change their website instead of me resizing my screen all over the place. All right, there we go. Now we can see it. So let's filter down to the United States. Let me clear everything. Imagine if we were to actually go through all these other countries' economic calendars and stuff like that. Imagine how much better our decision making would be on like investments and stocks and all that type of stuff. Let's go with consumer with confidence index. Let's go with here. Let's go here. Inflation. Let me see. Guess we're good. And importance. Apply. Apply. All right. So we have the consumer board. We have the initial jobless claims. We have the CPE. I don't see. All right. There's got to be another one missing in here. Let me see. Oh, it probably has the consumer of Michigan under a second tier citizen. All right, so we're going to be looking for the U.S. Census Bureau will release its monthly report on durable goods. So let's go to the durable goods report. That was supposed to be on Monday. Where is that? So what exactly is the durable goods report, right? See, look at this getaway after search, right? So the U.S. Census Bureau report on durable goods. The U.S. Census Bureau report on durable goods is a monthly report that tells us how many big, long-lasting items like cars, refrigerators, and and computers are being ordered and sold. Durable goods are things that are expected to last at least 3 years. So they're not things like food or clothes that we use up quickly. I don't know. My mom has a shirt from like 20, no, from like 40 years. My mom has a shirt from like before I was born, right? Like 40 years ago. So I don't know. Maybe clothing can be durable goods. I don't know. Durable goods are things that are expected to last 3 years. The report shows whether people and businesses are buying more or fewer of these goods compared to previous months. It's like a snapshot of what's happening in the world of big purchases. It says that this report is important because it gives us clues about how the economy is doing. When people and businesses are buying a lot of durable goods, it means they feel confident about spending money, which can be a sign that the economy is healthy and growing. On the other hand, if they're buying fewer durable goods, it means that they're worried about the future and are saving money instead. Economists, business, and governments use this information to make decisions and plans, just like how you might use your allowance to decide if you can buy a new video game or should save for something like this. Interesting. People even at my age are still buying video games. So I guess this does make sense. All right, let's go to, all right, where's this report on durable goods? Let me see. Where would be the report on durable goods? The economic activity, maybe? There we go, durable goods. Let's go to here. And the forecast was 4, and it was actually 9.9%. And so your card says, just think of durable goods as something that cannot be used up. Yep, that makes sense. That makes sense. But I think that also includes my mom's shirt. My mom has a shirt from over 40 years ago. I'm just saying, right? I'm just saying. Let's go to this report. And why does this thing look all off screen? All right, let me see. Can I? Let's do that. All right, cool. There we go. So all right, let's go here. So manufacturers, shipments, inventories, and orders. Where's the durable goods report? Oh, that's not a good thing to have on their site. 429 too many requests. Always doing QA at the end of the day, right? So let's go. What the heck? Are you serious? So the U.S. Census Bureau under a DDoS attack? Let me see. Well, you can't see. All right, so let me see if I can show it to you, what I'm seeing here. You can. Let me put it to the other screen. You'll see what I'm saying. Take a look at this. This is what I'm seeing. Too many requests when I'm trying to go to the Census Bureau for economic indicators. So maybe we'll come back to that, but that is down right now. But as your card says, just think of it as something that cannot be used up, which makes a lot of sense, right? So food is definitely not a durable good. Although I've heard that there are some McDonald's burgers that will last a lifetime. They will last a lifetime if you don't eat them. So keep that in mind as well. So let's go back to here. Let's go to our next information, then our next topic of data. Yeah, on this, I mean, it is a government website, so I guess that does make a lot of sense. Let's go to our next section. So maybe we'll revisit this, maybe not. But if they can't get their act right, then what can we expect, right? So the conference will release its monthly consumer confidence survey. Let me go back to my ghetto dictionary. Consumer confidence. So the Consumer Board's consumer confidence survey. The consumer confidence survey is like taking the pulse of the general public to see how they feel about their money and the economy. Think of it like this. If you're hauling loads across the country, the number of loads you get can depend on how much people are buying. So we're looking at this from a trucker, like from someone who's a truck driver's perspective, right? When people feel confident about their job and money, they're more likely to spend on things like cars, TVs, and other goods, which means more load for you to deliver. But if people start feeling unsure or worried about their money, they might tighten their belts and buy less. This means fewer loads on the road as companies slow down production. So the survey is a way to check if people are feeling good or bad about spending money. If people are feeling confident, it usually means good news for businesses and more work for everyone, including truck drivers. If they're feeling down, it could mean a slowdown in buying and shipping. So, let's take a look at that then. We have, all right, this is too much stuff in this filter. Let me get some stuff out of here. Let's get rid of this one for now. All right. So consumer confidence, it was previously at 101.9 and it was forecasted to go lower actually, but it actually went higher. So your car says, who built that crap? I need to get government contract on building their backend. Seems like easy money for bad syntax. That is true. That is true. Yeah, 420. Like, I mean, but it just seems like they're not properly scaling. They're not properly handling the load on their systems. From a 429 too many requests might be. I don't know. I mean, who would want to attack? Who would want to do a DDoS attack on the Census Bureau's website? And who would do it on a Saturday morning? I don't know. It's just weird. It's just the word of the past month is weird. It's just weird. All right. But let's take a look at the Consumer Board's consumer confidence survey. All right. Goodness, all this stuff is popping up. All right, let me see. This screen share is really bothering me. Let me see if I can find it. All right, I'm gonna go to the other screen. On news. Give me a second. Let's go like this. All right, that works. Okay. Let's go here. All right, we'll use this one. So consumer confidence rises slightly in August. So updated Tuesday, August 27, 2024. Let's read through this real quick. The Consumer Board Consumer Confidence Index rose in August to 103.3, which uses 1985 of 100 as its baseline, from an upward revised 101.9 in July. The present situation index, based on consumer sentiment of the current business and labor market conditions, improved to 134.4 from 133.1 in July. The expectation index, based on consumers' short-term outlook for income, business, and labor, also improved in August to 82.5, as the expectation index was for July was revised up of 81.1. August marked the second consecutive month of the index above 80. A reading below the threshold of 80 is usually signs of a recession ahead. The cutoff date of the preliminary results was August 21st, 2024. So it was above 82.5. July was revised up from 81.1. So yeah, so it looks like we are not in a recession state right now, right? Or potential, who knows? Overall, consumer confidence rose in August, but remained within the narrow range that has prevailed over the past 2 years, said Dana M. Peterson, chief economist at the conference board. Consumers continue to express mixed feelings in August. Compared to July, they were more positive about business conditions, both current and future, but also more concerned about the labor market. Anything significant happened towards the end of July going into August? Interesting. If they were a little bit more positive in July, but now they're like, I'm not too sure. What happened? Did something happen? I don't know. You guys let me know. Did something happen? Consumer assessments of the labor situation, while positive, continue to weaken, and assessments of the labor market going forward were more pessimistic. This likely reflects the recent increase in unemployment. A couple of things might have happened. I don't know. Consumers were also maybe 818,000 things might have happened in August. I don't know. Consumers are also a bit less positive about future income. That's unfortunate. That is unfortunate. In August, confidence declined among consumers under 35, while it increased for those 35 and older. On a 6-month moving average basis, confidence remained the highest among young consumers. Despite the overall improvement in the headline index, confidence declined for consumers earning less than $25,000. On a 6-month moving average basis, consumers earned over $100,000 remained the most confident. Shout out to the 100,000ers. Confidence among consumers earning 15K to 24.9K continues to trend down and was almost as low as those earning less than 15K. Well, if you are earning 15K to 24.9K or less per year, I kind of understand why you would not be as confident, but but have no fear. Drop the Mitch Superman emoji in the chat. Mitch is here to stand up for your rights. Let me see. Or for your feelings, right? Peterson added, consumers were likely rattled by the financial market turmoil in early August as they were less upbeat about the stock market. Yeah, there was a day that it dropped like 2,000 points, right? In August, 46.9% of the consumers expected stock prices to increase over the year ahead, down from 50.6% in July, while 27.2% expected a decrease up from 23.1%. August write-in responses also included more mention of stock prices and unemployment as affecting consumers' views of the economy. However, consumers did not change their view about a possible recession. The proportion of consumers predicting a recession was stable and well below the 2023 peak. And so that means people are thinking or feeling that there's more likely to be a recession now than in 2023. Interesting. Could it be because the price of food, gas, and everything like that? Consumer assessments of their family's current financial situation were less positive, but consumers were more optimistic for the next 6 months. Wonder why that might be. Average 12-month inflation expectations dropped 4.9% in August, the lowest since March 2020, and consistent with slower overall inflations and declines in some good prices. Nonetheless, mentions of prices and inflation topped write-in responses. Well, meanwhile, the share of consumers expecting higher interest rates over the next 12 months dropped for the third month in a row to 46.5%, the lowest since February of 2024. Well, at some point, you can only go so high on the inflation, right? Like when you hear about inflation at like now, what did they say? It's like less than 3% or something like that. But can you really measure inflation on a global scale, or should you break it? Like, all right, Does the same inflation that Mitch might face compare to the same inflation that Alexis might face? That's a question, right? Because let's say this, right? So Alexis told us the other day that she homeschools her kids, right? Let's say the books, the school supplies, the curriculum and stuff like that, the tuition, or however homeschool works, right? Let's say the price of that goes up significantly, right? But let's say Mitch doesn't have any kids to send to school, right? Then he's not getting affected in the same way that Alexis would be affected, because her prices for her items might be more in one way or another. But if Mitch has to fill up gas in his Lamborghini, those gas prices might be different gas price. Unless Alexis also has a Lamborghini, right? And unless Alexis also has a Lamborghini. Alexis, do you have a Lamborghini as well? Because then my whole example goes out the window. So just confirm that you do not have a Lamborghini like Mitch does, but the gas prices might affect Mitch differently than it affects Alexis. The same way the things that Alexis needs to teach her kids is going to not affect Mitch in the same way. So although it might be the inflation for food, the inflation for school supplies, the inflation for gas, it's going to hit different people. It's going to hit other people differently. So let's say, Mitch, as you say, the eggs are still $20, right? But what if it's a vegan? What if, they exist. What if it's a vegan, right? They said, all I need to live on is lettuce, right? All I need to live on is lettuce and carrots, right? Lettuce and carrots. So then the inflation is they're not going to have to pay $20 for eggs. They might have to pay $5 for lettuce, but it's going to be different, right? So I'm just saying. What do we have Team Mitch in the chat? Do we have Team Mitch in the chat? What? All right, I'm out. It was probably Mitch. She probably agrees with you because of that Jay-Z comment that I said. It's probably because of Jay-Z, right? It's probably because of Jay-Z. But hey, I said what I said. All right. I'm just saying. All right. Let's keep going. All right. The average total inflation dropped to 4.9. The lowest since, let me see. We read that. On a 6-month moving average basis, purchasing plans for homes fell to a new 12-year low, while buying plans for cars improved slightly. So purchasing plans for homes fell to a 12-year low. So the people are not even looking to buy a house no more. They're like, I'm not going to pay 6-7% on interest rates. Although my friend just bought a house and he got it at 5% interest rate. So believe it or not, right? So buying cars improved. Buying plans for big ticket appliances were on the average, but the increase was driven by only a few items: refrigerator, TV, and washing machine. Plans to buy a smartphone or laptop in the next 6 months increased again. I just recently bought a laptop, so that makes sense. And in August, writing responses, the share of respondents believing the 2024 election would impact the economy was stable at slightly above 2020 levels, but well below the August 2016 levels. Let me read that again. The share of respondents believing the 2024 elections would impact the economy was stable at slightly above 2020 levels, but well below the August of 2016 levels. What is that saying? Yakar, what is that saying? What is that saying, Yakar? Mitch, what is that saying? Break that down for me. All right, let's keep going. So present situation. Consumer assessment of current business conditions were more positive in August. 20.8% of consumers said business conditions were good, up from 19.2% in July. 17.7% said business conditions were bad, down from 18.2% in July. All right. But consumers' appraisal of the labor market deteriorated in August. 32.8% of consumers said the jobs were plentiful, down from 33.4% in July. I mean, after they tell you 818,000 jobs never really existed, that is kind of like a gut punch, like, ugh, right? 16.4% of consumers said jobs were hard to get, slightly up from 16.3%. That's just 0.1%. Let's see. Expectations 6 months hence. Consumers were more optimistic about the business conditions outlook in August. 18.4% of consumers expected business conditions to improve, up 15.2% in July. 15.6% expected business conditions to worsen, down from 16.2%. So people think business are going to get better in the next 6 months. Consumer assessment of the labor market outlook were slightly less optimistic in August. 16.1% of consumers expected more jobs to be available, up from 15.2% in July. 17.5% anticipated fewer jobs, up from 16.4%. So they think there's going to be more jobs in the next 6 months. All right. Let's see. I'm going to get to the comments very, very shortly. Welcome in, Innocent Learner. Welcome in, Maddox. Let me see. Consumers' assessments of their income prospects were more pessimistic in August. 16.9% of consumers expected their incomes to increase, down from 17.2%. It's hard out here. And 17.2 or 12, what am I saying? See, reading it backwards. 12.7% expected their incomes to decrease, up from 11.6%. Ooh, that's a good punch. A whole percentage point, a whole percentage point ahead expect their incomes to go down. So that sucks. That really sucks. Let me see. Anything else? I think that's it. I think that is it. So let's go back to full screen. Whew, that was a lot. That was a lot of information. Let's take a look at the chat to see what we have going on. Who do we have in the building? All right, let me start off with going from the top. And your car says Jerome Powell's lying. You know what? And let's see. Which says, do you see the BS mortgage rates are down, acting like some big jump? Let me see. What else we got? Guys, I'm not going for the pump fake. Mitch, do you think your car plays basketball? Do you think your car is a basketball player? He's talking about pump fakes. Do you think he's a basketball player? I don't know. If Trump wins, they know they have to drop it. If Harris wins, they will continue to skyrocket off to the moon, to infinity and beyond. So your car told us that durable goods, they are things that cannot be used up. And we have a technical difficulties alert. Let me see if the site is back up, actually. It's back up. It is back up. But you know what? Census Bureau,
congratulations. You played yourself.
You missed out on the opportunity to be on the Men Lie, Women Lie, Numbers Manipulate show. All right. Let's see. DDoS attack on the Census Bureau is wild. It is, right? Let me see. So your car is saying this is what changed between July and August and the fake jobs. Your car, I do not appreciate you calling them fake jobs. All right. That is not nice. That is immoral and unethical. You should call them mystery jobs, ghost jobs, unalived jobs, or my favorite one of them all. Undocumented jobs, your car. They are undocumented jobs because those jobs stood the passage of time, of time, and they were never documented, but counted as existing when they never really did exist. All right. So that's what they are. All right. You got it. Your car. So just, your terminology, your car, we don't want to call them fake jobs because that can be pretty offensive to, people. So they are ghost jobs or undocumented jobs. All right. So let's be professional. Let's be professional, car. Let's be professional. Okay. No fake jobs. It's kind of like when people misspeak, it's not a lie. I misspoke. They misspoke about the jobs. It was a math issue. They forgot to carry the one, and then it should have been like zero, but it ended up being 818,000. All right, so come on, Car. You know, it was a grammar issue. It was a grammar issue, you know? So it is what it is. Your car says the lower class is in a depression, the middle class is in a recession, and the rich just don't give a. Well, you know what? I think that the middle class and the lower class, they should help the rich out. They should help the rich out because the rich, they indirectly, although the rich don't care, they do help you back out indirectly, right? And we have the Mitch emojis in the chat. I wish you could actually show up on the app. Mitch says, I got a message from someone that said they wanted me to check out their platform. They are building for software architecture that is used for visibility for cloud costs and other stuff. Recommendations on cloud costs. What you think about that? I think that's awesome. And it's all the same. Inflation. We're not going to do this, right? It says eggs is $20 wherever you go. What if you own your own chickens? How much are eggs if you own your own chickens? If inflation is the same wherever you go, what if I can go to my backyard and I can gather the eggs that my chickens laid, right? Is it still $20 for me? Is it still $20 for me? I don't think so, right?
Bruh.
Now go hold that L. Go and hold that L. Let me see. We got Maddox in the building. What's good, Maddox? How are you doing today? It says premium on the Lambo is definitely expensive, though. That's a fact. That is a fact. You see, but Mitch knows that it's expensive. I would have no idea, you know? And we got Team Mitch in the building, says inflation is inflation. He may not have kids, but he may have other things. But I see, you guys are not listening to me. I did not say that inflation is not inflation. I said inflation hits people differently based on their life circumstances, based on where they're from, based on what they're doing, you know? So that's all that I'm saying. That is all that I'm saying. You see, you guys are so quick to agree with Mitch when you guys know at the end of the day that I am always right. So you, my dear friend Alexis, you get a...
Congratulations. You played yourself.
I'm just kidding. And it says, I definitely don't have a Lambo. Okay, that's fine. That's, I guess a Range Rover will settle. I know. You do have kids. You can't fit the kids in the Lambo, so the Range Rover works. I got you. It says, he is mad that you agree. I am so, you know what, Alexis?
How dare you?
I tell you, not cool whatsoever. And we got Endless Learner in the building. It says, happy Saturday, y'all. Happy Saturday to you as well. And it says, what I'm taking is that he is showing the difference in cost with his build versus a normal build. All right, so all that. This is Saturday. This is Saturday morning. This is money talk, not technical talk. Come on, guy. Come on. All right. Let me see. All right, so this is why the pay argument doesn't make sense. If you spend $300 a month for groceries, now it's $400, etc. If you spend $100 now, it's $200. The percent is still the same. Okay, Mitch. Okay, you just... Mitch, if on food, right, it's 20% inflation, right? But on something else that you might buy or something, like food is always going to be the same for everyone, right? But on different things, like let's say on car, right? Let's say for gas, it's however much, right? Let's say you just ride a bike. It's not gonna, you're not going to be affected in the rising price of cars, the rising price of gas, the rising price of maintenance as someone who just rides a bike or a skateboard. That's all that I'm saying. All right. Let's see. And the source says, I've seen all 818,000 of those jobs on LinkedIn. Yes. I've seen them too. And shouldn't it say depends on who is elected if there will be jobs or not? Well, there will be jobs. The question is, where will those jobs be? Because I heard that the results of our investigations about what's causing all the people to flood into our country, what we ended up doing was having American companies invest in those foreign countries so that they can have jobs while our job numbers our unemployment rates are increasing. So, I don't know. I just report the news. I just report the news. And we have somebody new in the building. We have Miss Newton. Well, good morning, Miss Newton. How are you doing today? Says glad you are covering this. Thank you so much. Glad to have you here.
I appreciate you.
Welcome, welcome, welcome. Let's say that Mitch Quirk says we do this every Saturday morning. Yes, we do. And says PC connection keeps dropping, but Twitch and Kick are fine. Get on the phone with the same connection stream working fine, but why? I have absolutely no idea. Pump fake doesn't always mean basketball. Your car always talking about. I did not see that one coming. You're correct. I mean, I guess you could do like a pump. I guess you could fake a pass in football too. Or, in baseball, when they try to fake the throw to the base because they're trying to steal the base. That's a good point. That is a good point. Your question says purchasing plans just means how the home is financed and the equity or debt that is being transferred with it. That is price. That is called job gauging. That makes a lot of sense. That makes a lot of sense as well. That's offensive to fake people. See, that endless learner gets me. Calling it fake jobs is offensive to fake people. You see? Thank you very much, endless learner. Let me see. Oh, so see, Mitch name, it goes deep in the street. Says your car asks who messaged him, and it says just some random person that someone else told him who I am. Do you know who I is? That's what Mitch said. That's what Mitch says. It says you are listening slow. I'm just saying. Right? And it says not sure people are picking up what you're putting down. You see, thank you so much, Miss Newton. I'm trying to explain it to Mitch, but he's not listening. Right? Says you can feed 10 chickens for 4 months with $70 and get unlimited eggs. Wow. That's impressive. It says whose show is this? All right, you're right. Everything I said, I take it back. This is your car and Mitch's show. I'm just the face. We are not talking about a car. What are we talking about? I thought that's what I was talking. Well, just say that then. Mumbo jumbo guy. Oh, Mitch is coming with the fire. Stop talking in code. We would understand you. What are you talking about? I thought I was being clear. I thought I was being clear. Right? Maybe you're just listening too fast, Mitch. Maybe you're listening too fast. Maybe that's what it is. All right. I'm just saying. All right. Let me see. All right, cool. So let's jump into the next topic of discussion for today. Where is our data? Let's see. We are going to an all-time favorite, the U.S. Department of Labor and their jobless claims, right? So let me pull that up. Let's go. Mitch said, he do, because he knows. Like after listening to what I said, he's like, yeah, that does make sense. That I must say that makes sense because I agree with you and Alexis about inflation is inflation regardless, but the percentages change based on what your needs are, because there's a lot of stuff that you guys buy that I would never buy, I just reduce my own inflation. Like inflation globally, yeah, but my own inflation, like I'm like, if I see something too pricey, I'm not gonna buy it. You can't do anything about gas prices and stuff like that. But there's some stuff I'm like, all right, I used to eat this too much, I'm not buying it, and now I just reduce my own inflation. All right, let's get to the initial jobless claims. Let's go to here. Why aren't you switching? Hold on. Let's see. Okay. All right, things acting up. Let's go to here. Let's go to here. All right, there we go. So, the forecast for the initial jobless claims was 232. The actual was 231. So, what is the jobless claims, right? Let's get to the jobless claims real quick. So, the U.S. Department of Labor weekly jobless claims. The Department of Labor's weekly initial jobless claims report is like a count of how many people are asking for help because they lost their job and couldn't find work that week. Think of it like a school where every week some kids might get sick and need to stay home. The school keeps track of how many kids are out sick each week to see if the number is going up or down. In the same way, the government counts how many people are asking for help because they lost their jobs. This report helps us understand how the economy is doing. If more people are asking for help, it might mean there are fewer jobs available. And if fewer people are asking for help, it might mean there are more jobs available. All right. So let's break it down, see what we have. We're not going to spend too much time on this. Got about 30 minutes left in the show. Why is it taking me to this website? Hold on. Where is... All right. I should just drop this over here. All right, let's go. I'm just going to put it in here so we can always have it available. All right. Let's take a look at that. Let's zoom in a little bit. Mm-hmm. Oh, I see that. Cool. All right. So let's read together. We'll probably read the first couple of paragraphs and then jump down to the bottom. So in the week, and too small. Let me see if I switch this screen. Yeah, still not better. Or let me see if I zoom in one more. All right, good enough. So in the week ending of August 24th, the advanced figures for seasonally adjusted initial claims was 231,000, a decrease of 2,000 from the previous week's revised levels. The previous week's revised levels were revised up by 1,000 from 232 to 233. So it always gets revised up. Have we, your car, Mitch, Alexis, have we ever seen a down revision? Every time I see it, it's like, oh, it was revised up, it was revised up, it was revised up. So that means that in the week ending of August 24th, 231,000 people were filing for unemployment for the very first time. So it sounds like 231,000 people lost their jobs, right? That sucks. That really sucks, you know? And that's not including the 818 undocumented jobs that never actually existed, or non-existent jobs, fairy tale jobs. We need a better word than fake. I don't like undocumented because that means that they're jobs that go under the table. So undocumented isn't good, but maybe ghost jobs. Maybe we gotta think of a word. You can't think of a better word than fake jobs. Give me a better word. So, all right. So the previous week's levels were revised up by 1,000. 4-week moving average was 231,500, a decrease of 4,750. The previous week's average was revised up by 250 from 236,000 to 236,250. Let me see. The advanced seasonally insured unemployment rate was 1.2 for the week ending of August 17th. This is always 1.2. It never changes from 1.2. Let me see. Let's see. The unadjusted data, the advanced number. So unadjusted versus adjusted, right? So when it comes to like jobless claims, it's also like they adjust it based on the season, because let's say around Christmas time, right? Around the holidays, there's going to be a lot of people getting hired because they need, like, you know, Amazon might need some more workers, department stores might need some more workers, things like that. Whatever the case may be, there's going to be more people. Like let's say, so they might have to adjust it. So unadjusted versus adjusted is when like they just take the raw numbers, right? The advanced number for actual initial claims under state programs unadjusted was 191,835 in the week ending August 24th, a decrease of 628 from the previous week. The seasonal factors had expected an increase of 465 from the previous week. There were 193,441 initial claims in the comparable week in 2023. And then this is also 1.2 for the insured unemployment. All right, let's go down to, I would like to read this part for some reason. Initial claims for UI benefits filed by former federal civilian employees totaled 284 in the week ending of August 17th, a decrease of 53 from the prior week. There were 356 initial claims filed by newly discharged veterans, a decrease of 52 from the preceding week. Let me see. All right, so the highest, so who do you think is going to be first? Who do you think is going to be first, right? The highest insured unemployment rate in the week ending of August 10th were in New Jersey, as always. Followed by Rhode Island, California, Puerto Rico, Minnesota, Connecticut, Massachusetts, Pennsylvania, Nevada, New York, and Washington. California, it doesn't. New Jersey, like California is normally second or third, but New Jersey has like I think New Jersey has been number one since we started this, right? The largest increases in initial claims for the week ending August 17th were Florida. Florida made it to the top of the chart with 2,000. So largest increases in initial claims were, so that means like Florida had like 2,000 initial unemployment claims. California at 979, Indiana, South Carolina, Virginia, with the largest decreases in Michigan. Shout out to Michigan. And California. Oh, the decreases. The decreases were in Michigan at 2,000, or close to 3,000. Texas at close to 2,000. New Jersey. New Jersey is at the top and at the bottom, and Georgia and Puerto Rico. So that is our unemployment, our weekly unemployment numbers. Whew, that was a lot. All right, cool. So let's see what we got going on here. What do we have? What do we have up next? What do we have up next? Next up, we have the Bureau. We have GDP information. GDP information. All right. Let's see what we got in the chat. Let's see. So we have that. It says that's all manipulation. I mean, who will ever believe any of these numbers after they saw almost 1 million jobs? Which it can still. This was like a preliminary. The 818 is preliminary, right? It can still reach up to 1 million, right? But yeah. Let's see. Let's see your card dropping emojis in the chat. And it says Jersey will always be number one because of the heavy density of financial institutions compared to the total population. Same with Rhode Island. Oh, I see. I did not know that. The more you know, the more you know.
We the best.
Awesome. And the question says Cali is just trash. But your car, regardless of, the high crime, the beautiful beaches, the beautiful weather, people say, I just can't leave Cali because it's so beautiful. The crime, the taxes, the policies, but that beach though, that weather though, I get you. All right. What else do we have on our list? So, we have GDP. What are you down with GDP? See, Mr. Mitch is good. See, Mitch, I'm gonna set you up to say just start typing that was trash, right? Just start typing that was trash, and with your wastebasket emojis because I am going to make a bad joke, right? Are you down with GDP? Yeah, you know me. I found it pretty funny. But Mitch, go ahead and drop the trash emojis because I know it's coming. Are you down with GDP? Yeah, you know me. All right.
Congratulations, you played yourself.
So let's get to GDP. All right. Let's go to. So let's first figure out what the heck is GDP in the first place. Don't like the screen. Let me go to, well, let me see. Maybe if I do this. All right, that works. So what is GDP, gross domestic product? So the definition of GDP, right? It's like the scorecard for a country's economy. It tells us the total value of everything, all the goods and services produced within a country in 1 year. So let's break it down. Goods are things that you can touch and see, like cars, books, and toys. So like what do you call it? Like Mitch's Lambo. That's a good. Alexis's Range Rover. That's a good. Alexis, do you drive a Lexus? Wouldn't that be something, right? Alexis driving a Lexus, right? But the books for the kids, the laptop and everything like that. What are services? Services are activities that people like to do, like teaching, haircuts, and medical checkups. So like, doing jujitsu, like being a jujitsu instructor is a service. I guess running a gym is a service. Cutting hair, teaching, stuff like that. Services, all right? So why is GDP important? So it measures the economic health. GDP helps us understand how well a country's economy is doing. When GDP is high, it means people are producing and buying a lot of things. When GDP is low, it means the economy might be in trouble and might be producing and buying less. Comparing countries. GDP allows us to compare the size and health of different countries' economies. For example, if one country has a higher GDP than another, it generally means it has a stronger economy. Government decisions. Governments use GDP to make important decisions. For example, if GDP is growing, they might decide to build more schools and hospitals. If GDP is shrinking, they might look for ways to boost the economy. It also helps with business planning. Businesses look at GDP to decide whether to expand, hire more workers, or invest in new projects. High GDP usually means good times for businesses, while low GDP can signal tougher times are ahead. Tougher times, right? So now I forgot we had this. I forgot that we had this right here. So we had an example, right? So going off of your car's example, or earlier, not example, but what he said, we're going to be doing on Thursday, which is not what we're doing on Thursday, right? So imagine that you have a dope house. What? A dope house. Yes, a really cool house. A really cool house. Come on, dope. Yeah, a really cool house, right? If your neighborhood really cool house stands to make 100 $110 items in a year and sells each of them for $10, the GDP of that really cool house is 1,000, right? Now, let's say we combine a lot of those really cool houses, right? Now, imagine there are 10 really cool houses in the neighborhood and they all sell the same amount of $10 items. The total GDP for all those really cool houses are 10,000. This gives us a bigger picture of the neighborhood's really cool housing economy, all right? So in summary, so does that make sense? So one really cool house that's selling $10 items out of each house, right? They make 100 of those really cool $10 items and they sell them for $10 each because they're $10 items, right? That one really cool house is worth $1,000. Now, if 10 of those really cool houses are doing the same thing, then we have $10,000 GDP for those really cool houses, right? Make sense? Makes sense, right? Cool. So in summary, the GDP is like a big scorecard that shows how much stuff a country makes in a year or how much stuff really cool houses make in a year, right? So imagine if Imagine if these really cool house runners would actually think about this type of stuff and they would apply these economic principles to their operations, you know? I'm just saying. All right. It's important because it helps us understand the health of the economy, compare different countries, and make decisions for the future. All right. Make sense? Makes sense. All right, cool. So now let's figure out what the GDP actually is. So GDP quarter number 2. So the GDP was at 3%. What? How did that happen? So the previous GDP was at 1.4%. It was forecasted to be at 2.8%, but it's actually at 3%. Incredible. Incredible. Now we need to know what's going on over here. What's going on? Because if things are so bad, if things are perceived to be so bad, how are we at 3% GDP? Was Don Lemon right? Was Don Lemon right? When Don Lemon was lecturing that person on the street saying that he is, you know, doing worse currently than he was a few years ago, and Don Lemon says, that is not true. That is not true. You are actually doing way better than you were 3 years ago, believe it or not. Regardless of what your bank account says, you are doing way better. And Mitch, of course, has to say, Mitch has to hate on our friend Don Lemon, says, Don Lemon. That is so unkind. That is so unkind, Mitch. That is so unkind. Come on, Mitch. Come on. We have to be better, Mitch. We have to be better, okay? So, with that being said, let's take a look. Let's see what we got. So, let me see. Are we able to adjust? So, quarter 2 of 2024, 3.0 GDP. Quarter 1 was 1.4. How did that big jump happen? I'm really curious. How did that big jump happen? All right. So, let's see. Real gross domestic product increased at an annual rate of 3% in the second quarter of 2024, according to the second estimate. In the first quarter, real GDP increased at 1.4%. The increase in the second quarter primarily reflected increases in the consumer spending, private inventory investment, and business investments imports, which are a subtraction in the calculation of GDP increased. Right. So, let me see here. In Q3 of 2023, it was at 4.5 and it was at 3, it was at 1.4 here. It was at like maybe a little bit above 3 here. Let's see. So let's take a look at the current release. Let me see. Gross domestic product. So let me see. Real gross domestic product increased at an annual rate of 3.0% in the second quarter of 2024, according to the second estimate released by the U.S. Bureau of Economic Analysis. But this is still a preliminary estimate, so it might go up or down. The GDP estimate released today is based more on complete source data than were available in the advanced estimate issued last month. In the advanced estimate, the increase in real GDP was 2.8%. The update primarily reflected an upward revision to consumer spending. So people were spending more that made the GDP go up. 2020 Q3. 2020. So it's okay. So 2020 Q3, for it to be at this high, that's probably like when businesses started to open up from the pandemic. It was about like, yeah. And then it just went down and then it was negative in 2022. Interesting. So let's see. The increase in real GDP, we read that part. Compared to the first quarter, the acceleration in real GDP in the second quarter primarily reflected an upturn in private inventory investment and an acceleration in consumer spending. These movements were partly offset by a downturn in residential fixed investment. Current dollar GDP increased 5.5% at an annual rate, or 383.2 billion. Let me see. The price index for gross domestic purchases increased at 2.4%. The personal consumption expenditure, PCE price index was 2.5. All right, so real GDP 2.8. Well, you know what I'm going to do? Maybe next week, I'm going to take the GDP and I'm going to have them break down this number or this percentage based on our examples in the dictionary to see like, can you make the current GDP number make sense based on something that we can easily understand? Because seeing the numbers, like, so we understand what the definition is based off the example, but what do these numbers actually mean? So I think we can break this down a little bit more. So we'll do that maybe next week. Yeah, all right, it's cool. So that's GDP. Let's see what else do we got for today. And I want to get to the fracking thing too as well. Let's jump to, let's take a quick skim at the personal consumption expenditure. Let me check the chat real quick though. Let me check the chat real quick. Actually, no, we're going to jump to this and then we'll come back to the chat. We'll check to this and then we'll come back to the chat. All right. So, let me go to personal consumption expenditure. So the forecast was 2.7 and the actual is 2.6. Did they want it to go down? Let me see. What did they say in LinkedIn? LinkedIn said that so the report on Friday is actually to show that the PCE expenditures rose in July from a year earlier, the same in June. The index probably showed steady. All right, so it went to 2.6. So let's take a quick look at that. Personal consumption. Let me see. Personal income. Let me see. That's not the one we're looking for. Gross domestic product. Is it this one? I guess it's this one. I guess it's this one. The PCE price index increased 0.2% excluding food and energy. The PCE price index, real DPI increased 0.1% in July. What was it last year though? It doesn't show. For the preceding month, PCE price index for July increased. Let's see. We'll probably come back to this next week because I was looking for some specific data that would in here, but we'll table this one. Let's get to the fracking, right? So what we'll do, we'll push over these two and probably review it next week and see what we got going on there. But let's get to the fracking because I wanted to know what exactly is fracking. So let me see. So I had a search here somewhere. Because, all right, let's go here. So I wanted to see like what exactly is fracking. Let me check. I'm gonna check the chat. Then we'll end the show by watching what fracking is. Because I like honestly like being here in South Florida, I didn't know anything about fracking, so I always hear them talking about it. But you know, so let me see. Let's go to the chat and then we'll go to fracking. All right. So where were we? Alexander F. Welcome to the show, Alexander F. Don't forget about them earthquakes over there and them. That is true. That is true. They got those earthquakes, those fires. Like it's like they love living there, but the fires burn down half their state every single year. See, like give me a hurricane any day. Give me like I'm not asking for a hurricane down here. I'm just saying I would rather go through a hurricane instead of a brush fire. I'm just saying. All right. What else we got? It says he used to be. Don Lemon and lecture should never be mentioned in the same sentence. That is a good point. Welcome to the chaos that we call the Men Lie, Women Lie, Numbers Manipulate show. Yes, that's what we do. That is what we do here. It says the star is Mitch, then comes your car, and then comes the chump tech coach Ralph.
Bruh.
That's harsh. That is harsh. All right. Anyways, Mitch, let's go to, says, I don't want the spotlight. I just want my money.
Money. Hey.
And it says, only here I want the spotlight. It says, wouldn't that be due to schools being out and people taking vacations Q2 and Q3? Oh, that is an interesting observation. Very good catch. I didn't even think about that. School was out. So we probably do have higher GDP in those off months because people are traveling and stuff like that. Let's see what else we got. And your card says fracking is just how they drill laterally as well as vertically. Most people don't call it fracking. They call it hydraulic drilling. Interesting. All right, cool. So let's end the show by let's watch this video about what exactly fracking is. That is pretty much, when I watched, that's what it was like what your card said is spot on, but let's get to this video. So let's watch together.
Fracking. You've heard of it, you know it's controversial, but you might not know what it actually involves. Never fear, we're here to put some fracking knowledge in your brain. Fracking is the delightfully cheeky sounding nickname for hydraulic fracturing, which sounds a little bit less delightful and more like something you do to your enemies in StarCraft. But no, it is something we do to rocks. In the simplest terms, hydraulic fracturing is a way of getting more of the valuable fluids like oil and natural gas out of geologic formations under the ground. But these fossil fuels aren't like big lakes where you can just stick a straw in and suck. These reserves of oil and natural gas are found locked up in pores distributed throughout vast layers of rock, like shale. So how do you get them out at a reasonable pace? Let's look at a typical fracking setup for something like shale gas. You start with a deep vertical well, drilling a hole down to the level of the shale that you want to mine. The depth will vary, but just for example, one company claims its average fracking well depth is 7,700 feet. That's deep, almost 1.5 miles, or about 2.3 kilometers. When you're at the right depth, you take a 90-degree turn and continue to drill horizontally, parallel to the target rock layer. This horizontal section of the well can also travel for thousands of feet. Now here's where the fracturing comes in. First, you open up holes in the horizontal section of the pipe. Then
That's why they call it fracking, because they're fracturing the rocks. The more you know. The more you know. Because I was like, okay, where does the term fracking come from? And it's because you are fracturing the rocks when you're doing the hydraulic drilling. Interesting.
you vigorously push a liquid cocktail known as fracking fluid down into the borehole under high pressure. This fracking fluid is usually a mixture of water, some chemical additives like acids to help dissolve the rock and gels to thicken the fluid, and finally solid particles called proppants. We'll get to those in a second. When the mixture reaches the horizontal section of the pipe, it bleeds out through the holes into the surrounding rock, and the extremely high pressure causes the rock to form tons of little fractures or cracks. Through these cracks, the reserves of fossil fuels contained in the rock can escape into the well and be pumped back up to the surface. What was once entombed in ancient rock is now on the way to powering your car, heating the water for your next shower. And those proppants I mentioned, which are often just grains of sand, help prop the cracks in the rock open, so the Earth's precious bodily fluids continue to escape into the well without the miners having to apply continuous pressure. So that's how it works. But then there's the entirely separate question of whether fracking is a good idea. It's really controversial in many parts of the world. Some people claim it consumes too much fresh water and worry about what will be done with the fracking fluid after it's been used. And some wonder if it will create earthquakes or cause chemical contaminants to leak into our groundwater. So what do you think about fracking? Let us know in the comments, and subscribe if you want to keep learning more.
So that's what fracking is. So I had no idea. I had no idea until I saw that video. I was like, oh, so it's just another way of getting natural energy, gases, whatever. But I had no idea. I had no idea. So now I guess the next thing is, why is it so controversial? I can see why, like, without knowing all the effects, like, because it's a very, very big topic of debate. So big that people who said that they were totally in favor of banning fracking, right, are like, I never said that. Like, but we have you on video saying that you're in favor of. See, they don't want me to talk about that. But I'm just saying, like, my lying eyes and ears, because there was like, I am totally in favor of banning fracking, and it's like, I never said that. I would never ever ban fracking. I'm like, but wait, but you said it like 100 times. No, I didn't. Like, but you did. No, I didn't. Like, but is this? Hey, your car. Hey, all right, hold on 1 second. Hold on. Let me see if I can find this, because I gotta find this before we wrap it up. Let me see. Where is my? All right, so let me see if I can find this. Let me see if I can find this. Let me see if I can find this thing. Hold on. I got to see if I can find this. My God. Let me see. Give me a sec. Give me a second. Let me see if I can find it. Because all right. Let me see, because we just give me a sec. Just bear with me. Bear with me for a second here. As we wrap up the show, right? Thinking about the fracking, it reminded me of this, right? So let me go to this part. So let's go to.
As relates to with credit cards. As you heard me speak today in my board meeting about, I do not handle that.
Some of those charges are for you, though.
No, sir.
You didn't go to Las Vegas? What is that?
No comment.
You don't know if you were in Las Vegas?
Of course I do.
Were you?
It's not paid by them.
Did you fly first class to Las Vegas?
Any other questions?
Actually,
So, when I'm thinking about the fracking, it was like, I'm totally in favor of banning fracking, and it's like, okay, are you going to ban frack? Like, I never said I was in favor. I'm like, did you not say it in like a few years ago? I'm like, so that wasn't you on stage? No comment. Call me crazy. Call me crazy. I'm just saying. You know what? I have not heard from Ferris. I'm gonna send him a message today. I'm sending a message today. Alexander said, fracking was just the cause of the Exxon oil spill in the South years ago. They effed up the ecosystem in the Gulf of Mexico. They want to do that to Florida. Interesting. Rob, call him if you can. I'll see if I can, you know. That sounds like Rob. I never said that. Hey, Mitch, I'm still waiting for a timestamp from yesterday of something that I said, you know. So I'm still waiting, Mitch. I'm still waiting for a timestamp of something that I said yesterday. Oh my God. We will ban fracking on day one. I never said that. I never said that. All right. That wasn't you on stage. my God, that's so funny. It's so funny. This could affect the Florida tourist economy. You're from Florida. You should remember. You're from Florida. You should remember this. Yeah, there was like over on the Gulf, there was like ducks and stuff that were popping up with oil and stuff like that. But here's a question though. Here's a question. With the whole Exxon oil spill, right? Is that the norm? That like, or was that a mistake that caused all that to happen? So, I mean, I don't know. I can play devil's advocate, but we don't have time to play devil's advocate today. Maybe next week we'll play devil's advocate. I don't know. Because I don't know much about the fracking and the drilling and stuff like that. I thought the oil spill was happening from in the water. I don't know. Let's see. She probably doesn't even know what it means. She said she never even been to Europe in response to have she ever been to the border. No, but you got to do it the right way. It's like, have you visited the border? But you haven't visited the border. I haven't been to Europe either. I haven't been to Europe either. I'm like, well, do we have an issue with Europe? But it's like, so you haven't been to Vegas? Alexis, you haven't seen that yet. Don't tell me you haven't seen this, Alexis. You haven't seen this? Where? All right. Just for Alexis, I gotta play it. We gotta get out of here, but I gotta play this again. I have to play this again just for Alexis. All right.
Dinners to hotels and what appeared to be first-class airfare. Henyard and her allies spent thousands on everything from steak dinners to hotels and what appeared to be first-class airfare.
I do not handle anything as relates to with credit cards. As you heard me speak today in my board meeting about, I do not handle that.
Some of those charges are for you, though.
No, sir.
You didn't go to Las Vegas? What is that?
No comment.
You don't know if you were in Las Vegas?
Of course I do.
Were you?
It's not paid by them.
Did you fly first class to Las Vegas?
Any other questions?
Actually, we have a lot more questions.
Any other questions? I haven't been to Europe either. I haven't been to Europe either. Your card says, oh yeah, let me send him that text. Oh man, Alex says, I like the look on her face. That look was priceless. That look was priceless. Oh my god. He says he really. I'm just waiting. I'm just waiting. Right. I'm just waiting. Stop. It says stop messaging me about it. Don't yes. Me and Mitch will request for a team trade. Oh my god, that's hilarious. That is hilarious. I can't even comment on her anymore. It's embarrassing. That was too good. Ruth Chris. Oh my god. Do y'all remember how Chappelle Show, the very last thing that would say on the Chappelle Show after the credits would roll and stuff like that? Oh my god. She is the mayor. What is this? She's the mayor and what is the other title that she has? She's the mayor and some other thing, right? And why would she take the interview knowing? Never mind. Start at 2:40. You guys just watch the whole video. Says I've never seen this until today. Well, you know what?
Congratulations, you played yourself.
Anyway, she is the mayor and the township supervisor. Yep, mayor and township supervisor. I don't even know what a township is, to be honest with you, right? Anyways, Mitch says he's shaking his head, but that wraps it up for today. We're done. Great show, everybody. So happy to have you here as we got more familiar with this economic information. I just want to say a big thank you to the one, the only, Mitch, as always. Your car, the one and the only your car.
I appreciate you.
Alexis in the building.
Let's get it.
Alexander in the building. Shout out to Alexander. That is the super mayor, your cousin. Oh my God. What's going on here with the super mayor and Mitch being related? Are you guys related, Mitch? Are you guys related? Oh my goodness. Shout out to Maddox. Shout out to Miss Newton in the building. Shout out to Miss Newton. Thank you. So happy to speak to you today.
You the best.
And shout out to everybody. I'm going to put out an APB, a BOLO on Ferris to see where has Ferris been. Is he being able to handle those 10 jobs? All right. Oh my God. You know what, Mitch? Y'all gonna have Mitch start swinging at the air. Mitch is gonna start swinging at the air. You guys better be careful, right? You guys better be careful. He might hit some kids in the process, as we saw on Thursday. You know, because people can be some bad actors. You know, and I'm just gonna say this, Alexander, just be careful. I'm just gonna warn you. Watch out with Mitch, because as the AI chatbot has says, he does have anger issues, and we do not want you to catch those hands. All right. So be careful. Be careful. We don't want you to catch those hands, because you know Mitch is a boxer, and he be throwing those hands, and we don't want you to catch those hands, you know, because it won't be a pretty sight. It will not be a pretty sight. All right, so me and Mitch are gonna wrap up the show. You know what? Let me see if I can give me a sec. You know, I'm gonna wrap up the show like this, right? Because this is the show co-hosted by Mitch and your car. So we're gonna do this. Give me a second. I'm gonna do this real quick. I'm going to end the show correctly. All right. Give me a second. Give me a second to do this, because we have to do it right. We have to do it right. You know, we're not gonna be half-stepping this. Okay. Where are we? There we go. Let me do this, save that. And I'm going to go and go to here. And oh, come on. That's not what was supposed to happen. Let me go to. All right. So, whoa, where'd that go? Let's go to. We're going to end the show off right. So, we're going to have Lumpy, Tech Coach Ralph, and Mitch all on the screen as we end the Men Lie, Women Lie, Numbers Manipulate show. Right? So, there we go. So we got Lumpy. That is Lumpy is your car's peacock, and we have Mitch trying to have us catch those hands, and we have me. All right, so that's how we're gonna end the show. Thank you guys so much for tuning in. Thank you for joining your car, Mitch, and I, Tech Coach Ralph, as we wrap up the show. All right, so everyone have a amazing Saturday, and I'll be back on tomorrow live. All right. So the question before we go is.
Are you not entertained? Are you not entertained? Is this not why you are here?
I had a great time with you guys. Hopefully you guys had a great time as well. And you guys know, especially with inflation, however you want to look at inflation, especially, oh my goodness. Before we even go, We got my guy in the building, Tech Niche Tips. How are you doing today, Tech Niche Tips? How are you doing today? So happy to have you around. We're about to wrap it up, though. We had a great show. You see Mitch, we're catching those hands from Mitch. We have Lumpy, the your car's Peacock, wrapping up the show. But you guys know, today's price is not tomorrow's price. And today's price is not, Jesus Christ. You see, Technicians got me all flustered, all right? So let's run that back. Yesterday's price is not today's price, and today's price is not tomorrow's price because we might have some price controls in the mix. So look out for that.
One more thing. Price of the brick going up.
The price of the brick is going up. And on that note, friends, family, we are out.
You might think that getting into the IT field is impossible without a computer science degree, but Tech Coach Ralph is here to prove you wrong. Get ready for some jaw-dropping revelations on how to break into this lucrative industry. Listen up, tech enthusiasts! Are you ready to break through into the IT field, but feel like you need a computer science degree to make it happen? Think again! Tech Coach Ralph has some exclusive, mind-blowing secrets to share with you. Get ready to be blown away by his jaw-dropping revelations on how to break into the tech industry without a computer science degree. So get your notepad ready, because Tech Coach Ralph is going to change your life forever. Buckle up, because you're about to embark on a journey to success in the IT field.